Someone spoke to me the other day. Not the other day. It was a couple of weeks ago. What are we now? We're in March. March
March, for
2021.
goodness sake.
God, January had about 300 days in it. February had about 3, and now we're into March. I think it was beginning of February, end of January.
I think it was, you saying, what were you doing? You were doing try January. I think that's why. I think that's why February disappeared in a blur.
It did, just in a blur. I know it's a short month, but that's ridiculous.
Welcome to the How to Raise Money podcast for anyone who wants to raise other people's money for a business or property venture. Right now, there has never been more money on the planet, and there has never been more opportunity. This podcast will help you put the two together. So, if you need money for your business or property proposals from banks, lenders, angels, whales, or dragons, this is the podcast for you.
Hi, everyone, and welcome to the How to Raise Money podcast. My name is Ray McLennan.
And it's with me, Nigel T. Best. Raymondo, how are you doing? I think we got the, if you watch us on the video, we got the memo from the milk tray company that they needed some chocolates delivering because we're all in black here.
We're all in black again. I know.
Very good.
We need to coordinate. I was really going to say something controversial there. Like women who spend a lot of time together kind of coordinate things, if you know what I mean.
Yeah. I struggle to put my leg in the right trouser hole. So on a morning, so don't, you're asking a lot there, but right. We got a great topic here. It's kind of hit the reset button, isn't it? And let's go back to the beginning because it's a good topic. Yeah.
Back to basics, how to raise money, small amounts of money through to large amounts of money. So today we're going to talk about smaller amounts of money because, I think at the moment there's a lot of, we don't get a lot of requests for smallish amounts of money, but we do get them. We do get people saying, I was in a Clubhouse room the other day. You may have heard of Clubhouse. I was in a Clubhouse room and it was about raising finance. And with all these things, it's very subjective because someone came on and said, I need to raise a large amount of money and I don't know how to go about it. And can you give me some advice? So the first question was, well, how large is large? And she said, it was a woman. She said, it was a young woman. She said £6,000. And I said, okay. The reason I asked is because there'll be people here, everyone listening will have different thoughts of what that means. So it's nice to just sort of clarify it. I said, well, if you're asking me about private investors, that's not really something that we would facilitate. Now, that does not mean it's not something that a private lender would do. Big difference there. Anyway, we talked about that. And as usual, what I like to do with anybody who comes to me saying they want to raise money, I always say, well, have you considered everything else first? Because there's a cost attached to raising money. That cost could be in terms of interest rate, but there's also an emotional cost, especially if you're exchanging a part of your company for some money that you might never be able to get back, or some other mechanism that might cause you some emotional challenges. And I don't mean emotional as in, you're going to throw your teddies out the pram and things like that, because there are different types of emotional challenge. Some people get emotionally challenged just by having borrowed money. And then others get emotionally challenged if they've borrowed money and have had to give a personal guarantee or some other form of security that makes them nervous. And that's not good for doing business if you're worried, but if you're constantly thinking about something or if you're stressed about something. And it used to be said that, the more money you borrow, the sort of more stressful it is. But actually the opposite is true. I find that people who, I spoke to someone a couple of weeks ago who borrowed over 100 million. Wasn't in the slightest bit concerned.
Put it all on red. No, black, red. Oh, God's sake. Can I borrow some more?
Not in the slightest bit concerned. And then there's some people that, they borrow £5,000-6,000 and they're nervous Nellies and can't handle it. It's just a mindset thing like everything else.
Well, I think that leads us beautifully into number one, which is the mindset. So the very fact there that you raise the issue, if someone said, I want to borrow a large sum of money, and their definition of large is very different to other people's definition. To some, it would seem an impossible. I mean, 100 million to most people seems like an impossible amount. But let's face it, you're not going to go in and ask for your first deal for 100 million. But the process and the principles of getting your head around borrowing money, for some people, it's never a lender nor borrower be. Was some things drilled into people so that they say, well, if I haven't got the cash in the bank to buy it right now, I'm not going to buy it. But I think we've got a generation of people who have seen the power of leveraging borrowing to purchase assets that generate an income. And just throw in a quick bonus tip in here is to get your hands on the book Rich Dad, Poor Dad, to give you the understanding of that concept. Because the weird thing for me, Ray, on mindset and borrowing is you will have people who will be extremely nervous, who tell you, "Ooh, don't borrow money for property. That's dodgy." However, if you say, "I've spotted a nice car that'll end up in 5 years' time being worth about a tenth of what I want to pay for it now," they'll pop you in their car and drive you down to the bank to get a loan.
Yeah.
And it's just this crazy sort of attitude, isn't it, to debt, and how people say that there could be good debt and there could be, not so good debt. So the mindset, you must see that a number of times, Ray. People, as you say, people are nervous about borrowing tiny amounts. And
I mean, on that very subject, it happened to me a number of years ago when I had a restaurant and I was building the second restaurant, and I was looking ahead at the cash flow sort of thing, and I thought I'm going to be short of money for some kitchen equipment. It wasn't a huge amount; it was £12,000. But I had one restaurant up and running, and I went to my bank and I went in and I said, okay, trying to get the second one off the ground. You've seen all the turnover that's gone through from the first one. And they wanted business plans and this and that and the next thing. And when I just said, look, it's £12,000, it's not £120,000. They said, well, we're not keen on lending for these kind of assets, kitchen equipment, because it can depreciate real quick. And I said, well, it's cookers, it's things like that I need in the restaurant to generate the revenue. But they weren't for it. On the way out of the bank was the sign, the cardboard cutout of the woman pointing at a car loan for, 8% APR or something like that, up to 25,000. I had an account with the bank, personal as well as business. I walked over to the window and said, I'd like a car loan, please. And walked out, and an hour or so later, they had deposited 12 grand in my personal bank account, which I immediately transferred to the business bank account and bought the kitchen equipment. And then
it is crazy,
like 6 months later, I paid off this 3-year loan, much to their chagrin. They were sort of, they had no early repayment penalties or nothing like that. And they were obviously expecting to make a bit of money off it. So then they immediately said to me, well, you now qualify for £25,000 for a car loan. And I said, well, if I think about getting another car, in brackets, more kitchen equipment, I'll be back. So yeah, it is. But I mean, Nigel, all the marketing and all, it's all at consumer spending. That's where the marketing is driven. When you see it all, you see the car adverts on the telly and all that carry on. They're all driven at that. And yet, as soon as you drive the car out of the parking lot, as you it's depreciated by sometimes 20%. So it is.
It's crazy. It's crazy. I've had the same thing in the bank, where I had a conversation as to what I wanted to release some equity to purchase another property, and from my main house. And I went in and I said, yeah, this is what I want to do. And they just said, I think we should start the conversation again and let's discuss this extension that you're looking forward to building. And I said, what extension? They went, the one that you're going to get. That's about 10 miles away in the shape of a different. I said, really? Is this the way the game is played? And they sort of said, yes, this is the easiest way to do that. So it's crazy, but there might be something there. But I would definitely go back to Rich Dad, Poor Dad. If you've never read it, it's kind of the seminal tome of anyone that gets into property and borrowing to understand the difference between assets and liabilities. And I do remember the first time I heard it with me as an accountant, the person at the front posed the question, what's an asset and what's a liability? And I leant back, hands behind my head, leant back in the chair. And I looked around the room and I thought, well, there isn't one single person in this room who knows the technical accounting definition of asset or liability. And I just had a smug smile on my face. And this somebody put their hand up, said, yes, I know. And I thought, this would be good. Come on. And they said, yeah, an asset puts money in your pocket and a liability takes it out. And I think I audibly laughed out loud. I sort of went, ha! Anyway, the woman sort of momentarily paused, looked at this person who'd given the answer and said, yes, you're correct. At which point all these other people nodded and went, oh, yes, yes, well done. And I was sat at the back thinking, no. This isn't the correct definition of an asset and liability. What are you talking about? This room is full of mad people. And it took me a while to get my head around it. And I tell you what, his definition of an asset and liability is a damn sight easier than the technical accounting definition of an asset or liability. So go with Robert Kiyosaki on that one for sure, for sure. So that's number one then, mindset.
Yeah, definitely mindset. Yep, definitely. And once you've got your head around the mindset, then you can choose which path you want to go down. But I think that without borrowing or without lending, not an awful lot would get done in the world, Nigel. That's the thing. So,
yeah,
people couldn't buy property, people couldn't develop property, people couldn't do anything. I mean, the whole limited liability thing was concocted in the 16th, 17th century so that commerce could happen. And the British Empire took off as a result of it, and lots of other empires besides. You can't do an awful lot unless you borrow other people's money.
Well, you only need, go back in time, and there were great dynasties of banking and money lending. I mean, back in the Bible, the money lenders used to camp out in the temples, and then you had, coming into the Middle Ages, the Templar Knights rapidly became a business rather than anything else under the guise of something. But they had a very clever sort of a cryptic sort of coded message thing that you could deposit some money in England or France or something and disappear off 500 or 600 miles, hand over this little coded piece of paper, and you could withdraw your money over there. It was, it's got to happen. It's got to happen as this. And so you are not, if you are thinking to yourself, I'm still worried about borrowing money, you are sadly, if you're thinking you're the first person to have ever borrowed money, you most definitely are not. But what we are saying in this is, we are suggesting that there are good things to borrow money against, and there are less good things to borrow money against. So mindset, that's number one. What have we got for number two?
Second thing is, well, it depends how much we're talking about raising. So this one is about how to raise smallish amounts of money. We're going to do larger amounts of money later on. So we mentioned the woman that was looking to raise £6,000. So if you're looking to raise sort of sub 10,000, and, there are people who are, lots of them, who are starting off, first property, want to get something going, might not need to borrow the money to buy the house, but might need to borrow money to do a refurb or, or get it done up, or buy furniture to stage it, something like that. Might be smallish amounts. So the second thing I would say to sell something physical, or sell something that is non-physical, services, for example. So, most people, if they look around the house, and I did it with my kids recently, we looked around the house at things that were surplus, and we went to eBay, put stuff on eBay, and in a very short space of time, had generated nearly £2,000 from stuff that was just lying around, old iPhones. They had an old couple of gaming things. One of them, in fact, could have been classed as vintage, but somebody paid, something that we thought we were going to get 50 quid for on eBay sold for nearly £300. So you just never know. You just never know.
No, you don't. I mean, Ray, one of the interesting things I've seen is once you understand that rich dad, poor dad asset liability concept, I have known people who've got a car and they actually bought it for cash. Now the car might only be worth, I don't know, £8,000, something like that, or maybe £10,000. I have known people who, when they've realized that, have sold the car. They still need a car, so they then lease a car. they've ended up driving around in a car that's newer and have released sort of the best part of £10,000 in cash, but are now leasing a car 150 quid a month. And that £10,000 in cash enables a property to be refurbed. The rental income then exceeds, has gone up by more than £150. And they've actually kind of invested in the property. The property value has gone up. They're now getting an extra 150, and that paid for the car ad infinitum.
Yeah.
And it's getting your head around those things, isn't it? So it could be that maybe you're in a house with two cars and you're working from home. Do you need both at the moment? Maybe not. Maybe
you
not.
don't sell one, but everybody has lots of things they can sell. The surplus stuff, and they've built these multi-billions have been spent on these platforms, and billions has been spent on distribution channels and supply chain, so that you can get your former used gaming deck that's sitting in a box, hopefully doing nothing. You can put it on eBay, spend a couple of quid, it gets to a massive audience, and then lo and behold, you've got 300 quid suddenly, a couple of days later or a week later. It's a system that's set up to be used, and I know a lot of people that use it, but I think that anybody can use it. It's there for anybody. No one is prevented from opening an online account. So I would say
no, and Facebook Marketplace is has grown to be really quite massive as well.
Yeah.
So if you've always wondered what that was,
that's something physical. Now, selling services and things like that has become a lot easier as well. And again, there's multi-billion-dollar platforms that have been created to do that. I've been instrumental recently in helping people to sell their services online. You can sell lead magnets, books, get email addresses, then start marketing your services, and then using something like teachable.com, you can start a course on anything. And I've done podcast episodes in other podcasts about exactly how you can do that, and the kind of money that can be generated from that can be quite significant. Now, I've had recently a couple of people that we've helped set up on Teachable who've generated £15,000 a month, £10,000 a month for a couple of months, and then it tails off a bit, and then they begin to realize that it's something they should nurture, and then they can go back up again and start earning some more money. So services can be sold online. Don't underestimate the knowledge that you have in your head about some subject, and it doesn't have to be property. It can be about absolutely anything. People will buy information, and there is a guy, Simon Coulson, who I think we both know. He created a series of how-to books. How to become a fireman, how to become a policeman, how to become a air traffic controller. Just that's a whole massive series of books that people who were in the industry wrote. He marketed them. They sold for, I think it was $19.99, and the deal was split, half between them and half between him. And he went on to make something like £12 million in about 10 years doing that kind of thing. So don't underestimate the knowledge that you have in your head. It's just a question of putting it into a format that other people can understand and will absolutely pay for. Absolutely.
Yeah, it's true. I was doing a webinar the other day, and there were about 500 people on it. And as I went through, it was purely a how-to webinar, and I couldn't read the comments as they scrolled off the screen. They were that fast, and that kind of amazed at how you can do that. And it was just revealing the tools where you can go away and do it yourself, sort of thing. So it's amazing when somebody sort of points out, have you looked at this? There can be a whole new world out there for people. So definitely physical products you can sell as well as services.
Yep.
So that was number two.
That was number two. Okay.
Number two.
Number
feels like about number 35, but number two.
Number three would be friends and family. Friends and family. They know you best. If you're looking to raise some money, smallish amounts of money, then they know you best. They know what you're capable of. If you manage to convince them that what you're using the money for is a good idea, and they're going to get a return on it, and it's going to be safe, secure, you're not going to rush off and put it on black or put it on red, but you're actually going to create an asset, then friends and family are the ones to turn to, because they're the ones that know you and are likely to support you more than a stranger will. That's for sure.
Yeah, that's true. It's sometimes a lot of people that, you know, we speak to, they say the hardest thing is to ask friends and family. It's almost easier to ask a complete stranger, because sometimes the very fact they know you, it terrifies you, because you might have had a track record of something. And yeah, I've had this conversation.
I was 12 when I bought that bike.
I know. When you said it, I said I was only 8 years old when I thought I could buy mud and sell it. You know, give me a break. But friends and family hold your track record against you if you're not careful, don't
Absolutely.
they?
Well, there was someone the other day talking on Facebook, and they made a comment that said, you know, I have my Facebook profile and then I have my Facebook page. So the profile is me personally and the page is business. And normally I post everything on the page, you know, when I'm looking for investors or I'm trying to get something off the ground, you know, and this person did refurbs and flips, that sort of thing. And then they did a post on their profile, which went out to friends and family. And a number of friends and family came back and said, I didn't know you were doing that. And they weren't looking for money. They were saying, I have done this project, which generated X amount of money for an investor. I will be shortly doing another project, and I'm currently looking for a similar project. It was that kind of post. And the friends and family came back and said, yeah, well, I'd like to be involved. And they didn't even know the friends and family had the money. So tell them what you do, let people know what it is that you do, and you'll be surprised who comes out the woodwork.
Absolutely. Okay, so there's number 3.
Number 3. All right. Number 4 would be the good old banks and credit cards. Now, whilst I would never advise anyone to build a business or do something using credit cards, I have seen it done. And I have done it myself in the past where, you know, you get a credit card, you're given a limit of whatever it might be, 10 grand, 15 grand, 20 grand. I knew a business angel who had a credit limit of £50,000 on his credit card that he never used. And in the last, recession, the downturn, 2008, 9, 10, he came complaining to me that his card limit had been reduced to 10 grand from 50. And he was raging. And I said, well, how many times do you use it? He said, well, I don't use it, but that's not the point. It's kind of there in case I need it. And I said, how long have you had the card? He said, about 12 years. I said, how many times have you used it? Well, I've never used it. I said, well, that's why they reduced it right down, because the banks had to shore up their balance sheet and all that sort of carry on. So they did that quite across the board. Once he found out it wasn't him personally, it kind of lessened the blow a bit. But he was quite annoyed. But banks and credit cards, you know, the banks do lend money. Overdrafts are quite cheap, although the rules have changed recently on overdrafts. So if you have an overdraft and it's under £500, then that's fine. But if it's over £500, they're now hitting them with quite hefty interest charges. So that's something to look out for. But banks will do term loans and interest rates are low. So take advantage of them. If you think that, you know, you can generate more. So we'll talk about yield for a second. If you're going to get a property, buy-to-let property, something like that, if it's going to yield 8% and you can borrow the money at 5%, you're ahead of the game. But if you're paying too much for the money and you can't get a decent yield on that money, then you probably need to rethink your strategy. But banks and credit cards. Now, someone spoke to me the other day. It was a couple of weeks ago. What are we now? We're in March 2021.
March, for goodness sake.
God, January had about 300 days in it. February had about 3. And now we're into March. I think it was beginning of February, end of January.
I think it was, you saying, what were you doing? You were doing try January. I think that's why February disappeared in a blur.
It did, just in a blur. I know it's a short month, but that's ridiculous. So this guy was looking to start his own business, and he still had was still working for an employer. And I said, go out and get as many credit cards as you can, because once you become self-employed, it'll be very difficult to get a credit card. And he said, well, I never thought of that, but I don't really use credit cards. And I said, well, all the better then. If you don't use them, that's great. But if you do need to use them to, let's say, buy services. And when we got speaking, he was going to be using the likes of Fiverr.com to get things made. And he was going to be using a number of sort of online software platforms, and needed access to some online training. Then the only way to get that, or at least I said a good way to get it, is to use a credit card. Because if anything goes wrong, anything like that, then it can be fixed. It can be use the cards, and he can use that to purchase those services, and can put them through through as business expenses.
Yeah, I mean, I have done it in the past where I've used my credit card to purchase something chunky, and then I have opened another credit card that was giving a balance transfer at 0%, and I think the transfer fee was 1.5%. So I borrowed, I don't know, maybe 5,000 or something, or something, purchased that on the card, and then flipped it over onto one that I'd got lined up for a balance transfer, and moved that across, and ended up with a £5,000 1.5% loan over, I think it was about 30 months or something like that. So it's a great way of front loading your cash flow. So you can get the lump sum up front and then have relatively small repayments. So, I mean, we will be talking about that as we do the next one, when raising bigger chunks of money, government incentives or government schemes where you can do that. But for this one, we're keeping fairly small amounts. So these are really useful things. And I know people always worry about borrowing any money, and you should, because the key thing is you have to know how you're going to repay anything. And that's the key thing. If you're just going to borrow it and go off and do something without much of a plan, then that is exactly it. It's not much of a plan. And, we would always suggest that you need to do this because you have a definitive outcome that you want to achieve, and that you have an ability you can see in the future in order to repay things. Do not head into something, we would suggest do not head into something where when the person asks you the first question, oh, that's good, how are you going to repay that? And you suddenly stop. The music, like when you walk into a dodgy pub and the chatter stops, the music goes, and everyone stares at you. You don't want to be that person at that moment going, repay it. Don't be like my kids who think that money comes out the hole in the wall, and it's just someone inside who just keeps giving it to you when you feel like you need it. They were staggered that you had to repay this money. So always factor that in, folks. Whether you're borrowing a fiver from a mate, I mean, obviously, if he's a lot smaller than you and you reckon you could either outrun him or thump him, maybe that's all right. But if he's a big guy, always work out, how am I going to give him his fiver back?
Yeah, indeed.
So that's bank and credit cards can be useful.
While we're on the subject of credit cards, now, if you have a business already, and we did this for someone, I was doing a presentation on how to raise money, and there are about 30, 40 people in the room, and we did a Q&A, and someone asked the question and said, what's the smallest amount of money you would, look to raise? And I said, well, for us to be involved with contracts and various other things, we really wouldn't want to go below £50,000 at all, really. We now do simple contracts for anything under about £100,000, but we didn't want to go anything less than that. And this chap said, oh gosh, I need £5,000 to keep my business going. And I thought, well, that's a bit tragic. What business do you have? And he said, I've got a tattoo parlor. And there was some license that he had to get. And he was confident that, but look, when I get the license, I'll be able to pay it no problem, because the number of clients I have now that I'm licensed will be able to, increase. And it was only £5,000. So I contacted a lender that I know, and they said, well, do they have a credit card machine? And they did. And he said, well, we can do it through the credit card machine. We will take the repayments through the card machine. So how that works is that they advanced him the £5,000. And then every time someone made a payment on the card machine, and being a tattoo artist, it was, it wasn't £2.50. It would be £50, £40, £60, £90, a couple of £100, that sort of thing. They would take a small percentage of that. So he didn't even see the repayments. And it was only a matter of mere months later that the loan had been repaid completely. And he sent me a very nice message online saying, thanks very much, saved my life, saved my business. That was great. Everyone had told me, there was nothing I could do. He didn't have I think he had, his credit rating was against him or something. I can't remember the details of it, but he'd exhausted most of the avenues. And this was one that was entirely open, and it worked. And then he was subsequently able to go back again, although I haven't spoken to him since, and I don't know if he has gone back again, but he was able to. I met him a year or so later, and he said that, they'd been in touch again and said if he ever needed anything, they were there to help. So I'm sure that was a win all round, because I'm sure they would have done it at a decent rate. But whatever it was, it worked. So credit cards don't.
I mean, that's an interesting one, because I don't think many people will have heard of that or appreciate how relatively straightforward and easy that is, and also, kind of painless. Probably unlike the tattoos, but painless in terms of the money disappears without you ever seeing it. It's as if you never had it. People find it really hard when cash flow is tight, the money comes in, and then they've got to physically give it out again. That's when people don't like it. So if you never get it all in, and it's already paying it off, that's good. But it
works in a similar way, sort of, to, I know people that have the pubs, when pubs were a thing. I know people that have pubs, and they could borrow money from a brewery on a similar scheme.
Yeah.
Where the brewery would advance them money to do up the premises or do whatever they wanted to do to it, and then they would simply take the repayments back from the payments they made to buy stock. So they would buy £1,000 worth of stock, maybe £100 of that would go towards the payment of the loan, and it was in discounts. So you didn't get your discount; you paid the normal price, and instead of getting a discount rebate, it just simply went to pay off the loan. So it's a similar idea. So that was number 5, credit card machine. Number 6 is a term called factoring. Factoring. You'll know all about factoring. And for anyone that's listening, factoring is essentially when you have a number of invoices. Let's say you invoice your work, and the clients, the customers, don't pay quickly, don't pay on time. You can take those invoices, you can go to a factoring company, and then they will advance you. Usually, I think it's about 80% of the money. So if you've invoiced 10,000, you'll get 8,000 on the strength of the invoices, and then they will pursue the customers for that particular debt. So factoring is another good way of doing it.
Yeah, it is, because some people, when they make sales, they might not have the resources in the business to chase up people, to be on the phone, to go around to collect the money. And if you've got slow payers, then selling it to a factoring company, 85% of the invoice value. So you've sold something for £100, the factoring company pays you 85 for it, and they make the 15 quid when they collect the £100. But in terms of headspace and other things, when you're wanting money up front, you might look at your sales and say, actually takes us 120 days to get this cash in. If you give it to a factoring company, then you could get that, on day one. All right, it's only 85%, but that immediate upfront cash flow, that cash injection into the business, could be the difference, because you can't hang on and wait, the 120 days till you get it, because it just puts pressure on the whole business, to keep going. So it's a great cash flow tool. Also, if you've got some pain in the arse customers, who it is always a pain getting the money off them, then just put it straight to the factoring company. They are sometimes relatively surprised when they phone up and say somebody else is coming saying we've got to pay them. We've got to pay them today. So I thought I'd let you know. We've sold your business on.
Well, one of the things, I've known about factoring for a long, long time, but when I was in a law firm and I was working, helping other law firms, that was one of the things that we did quite quickly when they had a bit of a challenge with getting their fees in, is hand that over to a factoring company, because they did have much more robust a more robust system when it came to collecting debt than the law firm did, which tended to be very much sort of, oh, you can't pay, oh, well, never mind, we'll talk to you next month type thing. No, the factoring company are like, hey, it's due now.
I'll phone you in an hour.
Yeah,
I'll phone you in an hour with your solution.
Yeah, exactly. But interesting, I've been working with a couple of professionals, and what I've said to them now, and it has worked for them, is that when they are selling their services to someone, they get payment right there and then. They get payment up front.
Yep.
And it does work. It's okay. There's a process to go through, but you can actually get payment right there and then on the spot and not wait until the product or service has been delivered. And quite a lot of online courses do that. You have to pay. You can pay in one installment or you can pay in 3 installments, but it's got to be paid before you get access to the material.
True. And during the pandemic, sort of lockdown 1, when people were trying to secure PPE or open accounts for food deliveries and things like that. So for me and what we do, they were big issues. And what you found is that if you didn't have an account with them already, because so many people were trying to come in, they were saying, well, it's cash up front in order to get onto our sort of our list of customers. And that's a perfect opportunity for the old fraudsters to step in.
Indeed.
And there were a few care homes that I know thought they'd secured some PPE and paid eye-watering amounts up front, and then lo and behold, they got no deliveries, and then they found out that there wasn't even a company. So if you are doing that, make sure you can do that to other people. But if they're asking you to pay up front, just do a bit of due diligence that they are legit, the services are there. Try and find some customers, do a bit of background research, because business should always be a two-way thing. And if you feel it's stacked in the favor of one person too much, then think again.
Okay.
Suggest
all right. So that is our 6 tips for raising smallish amounts of money. So number 1 was mindset. Number 2 was sell something physical or services. Number 3 was friends and family.
You had a third F in there, Ray.
Well, people say FFF, friends, family, and fools, who are usually when there's startup companies, that's what you look for, is friends, family, fools, because is it foolish to make an investment in a startup company? Some people have made a lot of money out of it, but they tend
probably
to
9 times out of 10, yes.
Well, they tend to take a balanced risk sort of thing, where an investor will make, if an investor's got £100,000, they might make 10 investments of 10,000 each, and 8 of them won't do anything. 1 of them will get their money back, and then they hope that 1 will repay all the others and the rest, which is usually what happens. But they never know which one it's going to be. Number 4 is banks and credit cards. Number 5 was the credit card machine loan, very underused, not well known. And number 6 was factoring. So there we are. How to raise smallish amounts of money. 6 ways to do so, and it will be in the notes, I'm pretty sure.
As he looks at me to say, yeah, don't forget to write those up. I seriously need to outsource this stuff. However, hopefully everyone, that's been useful. We're going to be stepping this up and doing bigger amounts. We'll intersperse these episodes with other interviews and other things. We've got some good people, I think, hopefully in the pipeline episodes, including people that have sold businesses for billions. So we are, this Clubhouse is a great way of connecting with people, isn't it?
It is. Very good way of connecting, and surprisingly easy to get people to agree. It's just, they'll agree, but then it's a question of finding the date and time to see.
That's the thing at the moment, just trying to coordinate diaries to do it. I said that we often do things Tuesday 8 o'clock in the morning UK time. It went quiet.
Yeah, because that's midnight and 1 in the morning for the
yeah. So we'll sort it out. We'll get it sorted out. But Ray, thank you very much. Excellent episode. I hope that's been useful for people. Just as a reminder, a refresher, there might be a new method in there that you'd forgotten about. It could be something that you pass on and help with somebody else who's struggling to do it. And we will see you in the next one. So who are you?
I've been Ray McLennan.
I am at Nigel T Best on Clubhouse. And we will see you very soon. Bye for now.
Good luck. Bye.
Thank you for listening to the How to Raise Money podcast. It's made for people who want to raise money as debt or investment equity for their business or property proposal or empire. The website has all the useful links and underlying research, and you can get downloads of the checklists and other useful information. See you next time, where we can show you how to raise money. There is abundance. There is money enough for everyone on the planet. The question is, who has yours?